Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, November 5th, 2021. As always, please don't forget to hit the like button, subscribe to this channel, and share this video with others. I'm gonna kind of get right to it, but here's what we're gonna cover. We're gonna cover stocks. We're gonna cover advanced decline lines as they break out to new highs. I will give several examples, Macy's and Revolve group, just home run trades. We'll look at junk bonds. We'll also look at Treasury bonds. And last week I had a question about how come I didn't cover any energy in a while. So I'm going to cover natural gas, oil, and Exxon, Mobil. And if you're a subscriber, then you can see that we're going to cover a bunch of stocks in the two newsletters that that are paid newsletters. All right, so let's get right to it. I don't want to spend too much time on advertisement. You can find me at the address in the description of the video. So lately I've been kind of liking the weekly charts. So notice that this is a weekly chart where I'm hovering right now. It says W. So you can change this to various time periods. Now, if you're using my indicators, so you can see that on this chart there are indicators, Master Charts Trading Price Action indicators. Notice that if I'm using the weekly charts, I'm changing the length to 52 weeks. If I'm using daily charts, I'm keeping the length at 250. So that hopefully makes sense to you. Looking at S&P 500, this is S&P 500 futures, so it's a very obvious chart, and the way I trade is super obvious. I use my indicators. You can see them on this chart, and the way I use them is when the stock breaks out, closes above the blue support resistance line. Notice right here on the week of 18th of May 2020, that's what happened. This is when we buy. Sometimes the stock pulls back towards the blue support resistance line, and you can see it here. It pulled back here on 15th of June. So that's another good opportunity to buy. And then we trail. So if the stock continues higher, and I have no idea when we enter the stock, is it going to go up or going to go down? But the chances of this happening, the chances of stock going higher once it closes above the blue line is very high. This is based on the back testing results. Again, these indicators are mathematically calculated, so I have quite a bit of back testing data that supports my programming. And once it closes above the blue support resistance line, there is a very good chance that the stock has stopped going down, and it's now going to continue going higher. So this is exactly what happened back in 2020, May, June, July of 2020. Basically, the market turned bullish. There was this pandemic collapse, from February 2020 into March 2020. Very quick and painful, I guess, for some people. But if you exited, then not a big deal. Notice again, then once we buy at this point, we're just going to trail at the blue support resistance line. In other words, we're not going to get stopped out by these little aberrations back and forth. We could take profits. Notice on this chart, if you can see it, there's this green thin line. So this is where I usually take profits. If a stock goes above it and then closes below it, like for example right there on the 7th of September, week of 7th of September 2020, this is what I would have taken some profits here. But some people never take profits, and they just buy and hold basically. And this is actually a very good strategy, honestly. Using my indicators, notice that again we're at record highs. Very, very, very strong stock market. People keep I keep hearing sometimes, people say that, well, this cannot go on forever and this has never happened in history. And I'm like, I don't care. The chart looks good, so we're gonna just keep trailing it. So S&P 500 again at new all-time record highs. We're literally in uncharted territory, and I don't see any reason why we cannot continue higher. We can double, we can triple, we can pull back 10% after doubling. It's a possibility. Does it mean it's gonna happen? We don't know. But at this point, we're trailing this higher. In other words, we're simply advancing our stop. If our stop was, a few weeks ago right there where I'm hovering at about 4,000, now our stop is at 4,200. Okay. Same goes for Dow Jones. Very little difference between S&P and Dow Jones. You can clearly, kind of see it, that there's really very little difference between the two. And, same thing. We're simply buying back in May, June, July of last 2020, and we're trailing higher. We're now at new all-time records. NASDAQ did the same exact thing. It's even stronger. I mean, it's just a monster move from our entry back in April. It was 200. It's now 400. So it did double. All right. So can it double again? It's possible. Yeah. Will it pull back? I'm sure it will pull back, but we don't know from what levels. You see my dilemma here. So at this point, again, we're simply trailing at the blue support resistance line. We're continuously advancing our stop. And the biggest news of the week, of course, is the small caps breaking to new all-time record highs. This is IWM, Russell 2000 small caps index, and it is now at new all-time record highs. Now, looking at this chart, it's very interesting to note that just this pattern. So notice this. Basically from about February of this year until now, we were trading sideways, but now we broke out. So many people estimate what is the size of the move to the upside, what's it going to be like. And looking at this chart, many people, and myself included, I would estimate that this move of 83 points from about 134 to about 240, so almost 100 points basically move, will be duplicated on the upside, you see. So, we're now at 240, we could be at 340, and then we might get a pullback, of 10% maybe. It's a possibility. It's a very strong possibility. This is a very strong bull market, so we need to be cognizant of that. So as we break to new records, we need to also look at market breadth. So what is market breadth? So market breadth is this. We can graph it by looking at New York Stock Exchange advances less decline issues. So I already have explained this multiple occasions, but what we're doing here is we're taking how many stocks are going up per day, subtracting from that how many stocks are going down per day, and we're going to add that number to the yesterday's number. So this is just how it's calculated. It's just a funny formula. And notice here we have broken out to new records. So what this means is the participation of the advance. In other words, how many stocks are going higher is indeed confirming this move. Okay, so what does that mean? That means that we are broadly participating. Many stocks within the index within the S&P 500 within this, in this case, New York Stock Exchange Composite, and there are many thousands of stocks and various securities that are traded on New York Stock Exchange. They're broadly participating and they're moving higher in tandem. We can also look at another measure of breadth, and that is New York Stock Exchange advances less declines volume. Okay, so how much volume? So if the volume is positive, we're going to say +1. If the volume is negative, we're going to say -1. And we're going to add, do the same thing as I just mentioned with the advanced decline issues. We're going to get a number. And here we're still slightly lagging. So if the S&P, you can see the S&P already broke out to new records where I'm hovering. The volume has not yet broken out to new records, but we are approaching new records. So this is actually quite good news, especially, from the point of view of the advanced decline issues. And we are, I am pretty happy with the way things are going actually right now with the volume with the advances and the declines. So the breadth of the advance is quite broad, and not just a few stocks are pushing this market higher, but quite a bit of stocks pushing this market higher. So I wanted to give a few examples. These are actual alerts. These are actual stocks that we traded. This is Macy's. So Macy's, I did exactly the same thing. We simply bought on close above the blue support resistance line. So first opportunity where I'm hovering was in January, a week of January 11th. And, the target was obviously reached right there on the 25th of January. Had another opportunity to get in right there on 29th of March. And again, target was already reached. Usually what happens is, if the target is reached, I move my stop to entry, and most likely I would have been stopped out right there on 19th of July, week of 19th of July, but then I would have re-entered. And this is again an actual alert right there. And this latest alert was just killer. This was 100% move. It went from, $16 to $32 basically. So, if you're a subscriber, congratulations. This is a very, just a huge move, especially if you bought options here. Usually I say it's 3 times. So roughly speaking, if you bought here options at, $16.50 and the stock moved basically 100%, then the option moved 300%. So big congratulations to you. Here's another absolutely killer setup, or the killer chart. This is Revolve Group, again one of the retail stocks, I believe. And again, actual alerts. I myself traded it several times. I think I think this entry was mine, but I got out like here somewhere. But you can see how easy it is, and you visually can very clearly visualize it. So this is what, I personally use my own indicators. Basically, this is all I use. And you can see why. It's because I really like simplicity. I practice Zen, I practice meditation, and you don't want to complicate things. You want to be very simple. You want to be straight to the point. So this chart, this indicators, and just how it works. You get right to the point. Where do we buy? Where do we sell? There is no mumbo jumbo. There is no volume. Notice there is no volume on this chart. You don't need volume, right? So you just need the price. We don't get paid in volume, right? We get paid in price. If the price goes up, then we are making money. If the price goes down, we are not making money. But if the volume is large or volume is not large, do we make money? Do we care about volume? To a degree, you need to care about volume because you need to see if the stock is widely traded. But by and large, it's not really necessary. and you can see that we can just get away with price action. All we need is price. So visually, again, this chart is quite appealing, very easy to read. So if you got in and you didn't get out, and actually it's quite possible if you got in right there in October of 2020, you didn't really need to get out. You could have just stayed in this trade. That's 360% move in your favor. Again, if you bought a leap option, for example, 2 years out, 3 times that easily. So that's 1,000% move. Think about that. So again, very easy to trade. You want to simplify your trading. You don't want to complicate your trading. Okay, so I personally don't use things like moving average. So here's a moving average. Yeah, I mean, it kind of trail, similar to what I have, but it's not the same. It's not as convenient, you see. With my indicators, it's just super straightforward, and you can totally see it, you see. So again, congratulations if you got in on this Revolve group thing. It's a home run for sure. Okay, so let's look at junk bonds. So junk bonds, number one, is correlation. So you can see this is a correlation coefficient. So how do stocks and junk bonds move together in lockstep? And this is correlation to S&P 500. And yes, generally speaking, stocks and junk bonds move together. Occasionally they don't. But by and large, I would say that junk bonds and stocks move together. So I'm going to treat them as such. So right this instant, I'm going to actually go to daily chart because it's kind of easier to visualize. So number one is we're so far doing the correct thing. We're bouncing in the correct place. So this blue line is holding, and the junk bonds are bouncing. Okay, what concerns me here is this. You see how narrow the lines have become? You're very close to one another here right now, but before they were quite far apart, you see. So what that means that let's say sometime in the future something happens and the junk bonds turn around and continue lower. The price will have a very easy time getting to bearish levels. And bearish levels at the yellow line, currently at 106, where I'm hovering. Before, until very recently, if this junk bond turned around and continued lower, it would have taken a lot of energy to get down to the bearish levels, which were way down here. But right now, the bearish levels actually got closer to price action. So it's something to be concerned about unless we make a new record. And it will be just so ideal if we make a new record and continue higher with the junk debt. So not out of the question. We're very close to records. We actually made a record, I believe, or rather 52-week high. We made a 52-week high like right there in July, and I believe right there in September. So we did make a 52-week high. We have not yet made a all-time high. Ideally, we should break above the pre-pandemic highs. And they're not that far off, so it's not going to take a lot of energy to push the prices higher. And this would be a great thing because I think the stock market is bullish. So to confirm that even further, junk bonds should be also in an uptrend. Okay, moving on to the Treasury bonds. Here's TLT Treasury bonds, again on weekly charts. You can go on daily charts. It actually makes very little difference. We did, when normally we trade on daily charts, so each of the candlesticks here where I'm hovering says D, means daily. And you can see here several alerts. Here's one on July, and this is a short. So if you had a, if you're sophisticated, if you have a, for example, you can buy puts, then this was an opportunity. But notice that there was no selling. It didn't really go anywhere. A couple more opportunities to sell short right there in September and early October. Again, it really didn't go anywhere. And what's happening now is we're actually approaching bullish levels. So bullish levels, and here I'm using my 6.0 indicators to project the price action, or rather to project the indicators into the future. You can see that they're coming down. So especially today, look at this move. We're really close to bullish levels. What does that mean? That means that if we break above this blue support resistance line, which is currently only at 150, and the price is like 149, so it's like literally $1 away. If we break above that, then we can see treasuries move higher. By extension, the treasury bond yield, TYX, will likely collapse. What does that mean? Now, normally, when treasury bonds move higher, this is a correlation coefficient, normally coefficient to the S&P 500 again. So normally when the treasury bonds move higher, stocks move lower. But if we look at this chart, so see how they are negatively correlated normally, vast majority of the time. So when stocks go up, treasury bonds go down. This is a normal relationship. However, on quite a few occasions, the opposite is happening as well. Sometimes the stocks and bonds go together in the same direction. Right this instant, I'm not sure what to make of it because of the distortions that are being created by the Federal Reserve with the constant, purchases of the treasury bonds, and now they're winding down that purchases. So we'll see where this goes. Really, will it affect the stock market? It's $1 million question. I, kind of want to just take the bonds and the stocks separately, and not really worry about the correlations too much. We'll see. If the treasuries break out, we'll buy them. They're very close to a good breakout, and we'll consider buying them. But does that mean that stocks will go down? No, it does not, because the correlations are not as clear. You see, it's not like 100%. So if the stocks go up, treasury bonds go down. No, it doesn't work that way. You can see that sometimes it goes up, sometimes it goes down. So the correlation is not clear. What I'll do is, if the treasuries break out above 150, 150.91 currently, then we'll just buy them. That's the best I can offer at this point, basically. In fact, you can look at on a weekly chart of treasury bond yield. You can see it's already breaking down below this red support resistance. So it is reasonable to expect a continuation of this move down. So it's reasonable to expect the yield to continue lower. Bonds, by extension, continuing higher. Okay, so we're looking now at energy prices, and this is natural gas futures. Again, I think I already showed this chart. I'm not sure if, how far back, but I did show this chart. So pretty obvious what we're doing here. Again, we're buying on close above this blue support resistance. You can see multiple arrows, again, actual alerts. The latest alert for natural gas was, again, a home run with 135% gain. Again, I think it's overextended, and these tails out of the top, so you can see there's 1, 2, 3, 4, 5 tails, and the price just is having a really hard time going further up. I think we're going to continue lower from here, and even though people keep saying that, the winter is coming, don't you think that the prices will continue higher for natural gas? I'm like, and it doesn't look that way to me. It looks like natural gas prices will come down. I think the reasonable, down target would be like somewhere around here, like 480, 450, 480, into, winter and spring. And from there on, we'll see what's gonna happen. Like right this instant, I'm just not seeing price of natural gas continue higher. I'm just not seeing it. And I read the reports, like Wall Street Journal and Europe, the wind stopped blowing and the coal is out. We're out of coal and the energy is going through the roof. And I'm like, okay, yes, it is happening, but just relax a little bit and the prices will come down, right? So I'm not as, I don't know. I don't panic as much as other people, I guess. So for natural gas, I'm definitely thinking that we're gonna come down to like 480, possibly 450, even maybe even lower. Who knows? Who knows? Maybe we'll completely collapse. It's also a possibility. I don't look at fundamental prices in the same way that fundamental analysts do. I basically ignore the fundamentals because, as I just showed you multiple charts, I'm doing the same thing over and over and over. I'm not really looking at any fundamentals. I'm looking only at the actual price, you see? So that's what, my style of trading. Here's oil, CL1 exclamation point. This is a continuous contract. Somebody was very smart in April of 2020 to buy it at negative $40. Weird, right? Have negative prices. But, for us, it was okay too. We bought right there, 11th of May. So, if you bought options on USO, let's say you bought options like, 2 years out, you could have made a huge amount of money because it went from 28 to 80. That's a lot, you see. And that was actually the last opportunity. Again, this is a weekly chart. You can look on daily, and it doesn't matter really. But this was actually the last opportunity according to my system. And for oil, I'm not as certain that prices will come down. I mean, they might come down a little bit, but right this instant, oil is firmly in an uptrend. So I would expect maybe a slight weakening, but not significant. I think we are going to continue higher. Not sure how high, but, we'll see. We'll see. So right this instant, again, oil is in an uptrend. So we will just keep it that way. And, if you really can trade oil and natural gas, you can indeed trade Exxon Mobil. And I mean, this is as easy as it gets. So looking at this chart, once again, I think it's pretty clear what are we doing here. Where are we buying at? What price level? We are buying on close above the blue support resistance line right there. So on week of 8th of February, the breakout occurred. This is an actual alert. I think I also bought it, but I think I already sold it or something. I don't remember. I have a lot of trades going. But, actual alert to my subscribers. So this is pretty straightforward. Another opportunity right there in week of 16th of August. Same thing. And now we're at new 52-week highs. So you see how obvious it is? You want to make your trading very obvious and easy. All right, that's it for the recap. Again, if you're a subscriber, we're going to cover, quite a bit of stocks. You see how many stocks we cover? There is a lot of stocks because there are 2 different newsletters that you can receive. But if you're ready to sign up, head over to MasterChartsTrading.com, one word. click on products and sign up for one of the products. So I have 3 bundles currently: trading indicators, which are these lines in the chart: green, blue, red, and yellow. This is basically all you need. This is how I trade. Very straightforward, very easy. Again, like Zen-like, simple. If you want also my newsletters, so sign up for indicators and newsletters. You can get 2 different newsletters: Elite and Speculator newsletter. And the ultimate bundle adds a stock screener. So stock screener also helps you find stocks that are doing that. They're breaking out above the blue support resistance. Or if you're doing something different, like for example you want to sell it short, then you can do the opposite. You can look for stocks that are breaking down below the red line. But overall, the system is quite simple. So head over to Master Charts Trading, sign up. There's a free trial. If you don't like it, you can always cancel. But my clients really like the indicators, so they stay with me for many, many years, really. Alright, that's it for this week's recap. Again, if you have any questions, please let me know. Don't forget to hit the like button. It really means a lot to me. Thanks for watching, and have another great trading week. Bye-bye.